a first-time investor webinar earlier as well, and then we got some more input on what else we could have covered. And so today, we're saying back to the basics again, but on a couple of other areas and more tips around in trading, what you can do, can't do. And we have an absolute rock star from our side, Shailesh Sridhar. He's part of the products team, works very closely with the head of products, Sarthak. But, today he's going to sort of lead us through this. We have Akshay Bhargava, as always, our chairman and founder, never misses this and is very happy to be here every week. And so are we. So please keep the chat buzzing and we'll definitely take questions. Akshay, over to you.
Thank you, Shruti. Again, my personal welcome to everybody. Really delighted to have you here. Wonderful to see some familiar names again. And Atul, that's a lovely car. I'm so envious. But anyway, good to see all of you. Today's session, if I may call it that, is really going to focus on your stock market journey. And why are we doing this? We did a little bit of it last time, and we got a lot of requests in terms of, can you explain to us how the markets work? How do we do margin? How do we do pledging? How do we open an account? How do we think of, some of the do's and don'ts? So we said the best person to do this is our own Shailesh Sridhar. And Shailesh has been a what I call a child investor. He's been investing since he was, very, very young. And, that accompanied by the fact that he's so interested and so engaged in it, he's really quite an expert in many things. So we asked him to come on board. So you will, today, he's the star of the show, and most of the time he will do the talking. But before we start, I want to talk a little bit about a couple of things that I think are very, very important before you start your stock market journey. And some of you will think that I'm sounding like a broken record. Maybe I am. But it is extraordinarily important to remember our mantra, U plus AI. Okay? This is about a combination of man and machine. That is what makes you so powerful. This is not about machine substituting man or man substituting machine. And I'm saying this for a reason, and I will tell you a story in a moment. So if I look at that, I've always said that we all have a secret superpower. Okay, it's U plus AI to the power of T. And that is the superpower. U is about you having enough knowledge and discipline. T is about leveraging the power of time. And AI is about using InvestorAi to improve your batting average. So today's session, we won't focus so much on InvestorAi. We will focus on improving your knowledge and understanding of how the market works. And the reason I think it is so, so important, let me tell you a story. We, as you know, many of you are part of our InvestorAi community, the WhatsApp group, and it's a wonderful, wonderful group, and we have two of them now. So so it's a very good group, and for the most part, there are really insightful comments and suggestions that come in. I learn things when I look at messages in the group, and from time to time, I post something as well. Recently, one of the users reached out to me individually and said that, look, you're not giving us enough information, and I really want to understand detailed calculations. Show me every stock on which you've generated an insight, and show me what the drawdown was, show me how the price moved from that day to that day. And I was a little confused as to where is this guy coming from? This is the kind of research. Firstly, we don't provide the service. That we will never do that. Secondly, whatever we provide to one person, we will provide to everybody, because that is our model. We have equal information for everyone. And in a couple of dialogues, it became obvious to me that his only focus was some technical analysis. And then he said, if I don't have that, how can I buy? I said, this is not about telling you what mathematical average happened on the 17th of June. This is really about you understanding. And his focus was on the algo, on the mechanics, on the arithmetic, on one aspect of the algo, not on the company or the stock that he was tracking. And I said, I was dumbfounded. I said, how can somebody do that? Machine is not substituting you. It is not giving you input that, okay, now go and buy. That's not the kind of signals we provide. But that is obviously what this individual expected. And anyway, that conversation apart, I was quite, shaken that there are people who are willing to trust the machine so much, and therefore want more and more information so they can trust the machine more and more. And I said, but you have to have a point of view. You have to have some sense of conviction about what you're buying. Otherwise, you should never buy it. So that brings me back to the theme of you plus AI. And, again, I know I'm sort of ranting a bit, but I feel quite strongly about it, that if you don't have a sense of conviction, if you don't understand what you're doing, forget what InvestorAi says, don't buy anything. Then you're not an investor. Then you're better off taking your money, giving it to somebody else and paying them money to manage it for you or give you advice so that you can do something. So that's sort of my little piece. What we will cover today, and Shailesh will cover that. We will talk about opening a brokerage account. We will talk about the mechanics of margin and pledging. We'll talk about corporate actions and how important they are in terms of thinking of return and so on. We'll talk about basics of taxation. Guys, we're not tax experts. We're not pretending to be tax advisors, but we'll just give you some basic guidelines of taxations and some do's and don'ts of trading. Okay. And finally, when Shailesh finishes, I want to show you some brand new features that have been launched last night in InvestorAi. So I'm really excited about it. Again, these are features and things that all of you have asked for. And, last week I showed you something, and this week I want to show you something new. And it's part of our journey, a constantly evolving app. And thanks to you, we will get better and better. So I will stop here, hand over to Shailesh, and I look forward to coming back and talking to you again.
Hi, everyone. So let me just put up the slides. I hope the screen is visible to everyone.
Yes, Shailesh.
So let me jump straight into opening an account. Now, whenever you start into the investment journey, there are two things you need. And the first one is a trading account, and the second one is a demat account. Now, what a trading account does is it will help you to buy and sell securities. Now, it temporarily holds the securities for you. Now, why do you still need a demat account? Is that a demat account is like a bank account. Instead of money, it will hold shares that you have taken for delivery, shares or even other securities. So that is basically a demat account. So whenever you go to a broker, they will ask you to open both. The trading account will be with them, and the demat account will be with a depository ID for NSDL or CDSL, where it is stored. Now, nowadays, whenever you sell your securities from your demat account, you will be authorized to, you will be asked to authorize the transaction as well. So whenever you're selling the holding securities, there is another extra level of authorization that is required. So that's why they will ask for a power of attorney as well. So you will have to sign it and give it. That happens only physically right now. And once you give it, the sale transactions will go through directly. Now, let me talk about fees. Fees are very important because that directly impacts your profits that you could make. So let me start with the first one, which is brokerage. Now, every brokerage has their own plan. Most of them, in terms of brokerage, have either a flat fee plan or a percentage plan. Now, what a flat fee plan is like 20 rupees per order or 10 rupees per order. And the other one is basically 0.03% per order or 0.05%. Now they charge differently for intraday and delivery, and there will be some clause written like lower than this or minimum of this. Nowadays, a lot of the new age brokers like Zerodha, Upstocks, they are offering zero delivery brokerage. That means you do not have to pay brokerage when you take securities for delivery, but everyone charges for intraday. But does that mean that when you trade delivery, there are no costs at all? That's incorrect. There are other costs that are always built into a trade, and the cost will never be free. Though they might market it as free trading, it never is. Something like AMC charges. Now, what AMC charges is account maintenance charges. It's charged every year or every quarter. And some of the new guys have it for free for a year, but it comes to around 300 rupees or 500 rupees per year. And some guys even go higher. Next one is DP charges. Now, this is, I think, one of the most not understood thing because it's hidden. No one really speaks about it, but I wanted to bring it to everyone's notice. Every time you sell a security from your demat holding, you deliver your selling, they charge anywhere from 15 to 25 rupees per trade. Now, even if you're selling one share or 100 shares, it doesn't matter. So all these 13 rupees, 0.02%, and then I've also written about STT, exchange fees, turnover fees, stamp duty. They're all very, very small amounts. Now, you're thinking, why is this guy speaking about 0.1% or 0.0%? Now, you need to know, whenever you enter into a trade, what is the break even of that trade? For example, if you're buying a stock at 1,000 rupees, depending on intraday or delivery, your break even is 1,001 rupees or 1,003 rupees, or it can go all the way up to 1,010 rupees, which is almost 1% with some brokers. So you need to be aware. And why I'm telling this again is my father trades about 25 securities every day. So when I open up his P&L statement, I see his brokerage charges are normally more than the profit. So those small things will actually hit you a lot. So you should be really careful. And that's why selecting a broker is very important. Now, what do you see when you select a good broker? The first thing, though I've complained about brokerage for the last 3 minutes, it's actually not brokerage, but it's about tech. They need to be up all the time. They need to be let you buy when you want to buy, and you should be able to sell when you want to sell. Now, you'll have system downs. There are a lot of brokers that happen. So please do your analysis on that, and then think about getting signed up with a broker. Second one is obviously brokerage. Now, if you're trading a lot, there are these packages where they have you pay something upfront, and they will reduce your brokerage or actually make it free also, but it's not free. Obviously, you're paying upfront. So there are these plans that they offer, and then there is also margin offering as well. So there you can trade on margin, which I'll come to the next one. So I'm moving on to margin and pledging. Now, there are two ways you can trade. It's either via cash or via margin. Now, margin essentially means loan or money borrowed from your broker. If you have rupees 10,000 cash in your account, you can buy 10,000 rupees worth shares. That is cash. But with a broker's margin facility, you can actually buy a bigger position using that same 10,000. Now, many brokers offer 4x, 5x, 6x brokerage on margin on intraday. Now, what that means, if someone is offering 6x, with 10,000 rupees, you can actually buy shares worth 60,000 rupees. Now, why would you do it? Why would you not do it? Well, margin amplifies profits and losses on both sides. For example, you put 10,000, you take 60,000 rupees per position. Assume stock goes up 20%. You have made 12,000 rupees profit or 120% on your investment. So you'll massively make more money. And as well, same thing happens when it goes down as well. So if you lose 20%, you will start losing money you never had. So, and that's why margin is a double-edged sword. Any order that is placed using a margin is squared off. Now, what does that mean? At around 315 to 320, and it just depends on brokers. Any margin order that you have put is automatically squared off. So if you had bought it at whatever time, 320, they will sell it. So that is basically squaring off. How do you avoid it? You will either have to bring in more cash. In my example, you had 10,000 and 60,000, right? So you have to bring in the other 50,000 rupees, put it in your account, and then convert that position into a cash trade, or else you decide your own exit instead of they deciding, and they exit at whatever price is available. So it will not be in your control beyond that time. Now let's move into pledging. What this means is that there are certain securities that you can pledge with your broker. In return, the broker will give you margin called collateral margin. This margin, again, you can use to trade. Difference between the two margins is that the intraday margin, which I spoke about, at 320, they are closing it off. You will not get it beyond that. However, this collateral margin actually will continue with you for a significant amount of time. Now, will you get full margin? For example, the 10,000 securities I was speaking about. You will get anywhere from 9,500 to 3,000. And that depends on the security that you are giving. Securities that are most stable, for example, liquid funds, which offer about 4%, 5% interest per annum. So they will slightly go up 0.0% every day. So, or gold bonds, government securities. Some years, a lot of brokerages nowadays even allow you to pledge mutual fund holdings. So mutual fund holdings, you can pledge it with them, and they will give you margin that allows you to trade. So what happens is there's something called haircut, and as I said, you don't get full money for your trading. They'll keep, based on how risky or how volatile the security is, they'll keep their haircut and they will give you back the money for you to trade. Will you get what kind of securities do you want to pledge? Now, they do take all the securities, but you will ideally like to pledge securities that you will not be revoking anytime soon. Because each time you pledge, again, there is 20-40 rupees plus GST. And you cannot sell your pledge securities unless you unpledge them. So that again takes 2 days. So if you want to sell something which you have pledged, you have to ask for unpledging. It will come after 2 days and then you will sell. So that they are taking away. But of course, there is the benefit of margin. Now, there are many full service brokers. Now, not Zerodha or Upstocks, they may not offer it, but other big brokers, they offer actually margin for delivery as well. So what I spoke about as intraday, they will actually let you keep for a longer time. But what is the catch? Interest rate. This is charged at 18 to 24% per annum. So you are literally borrowing on money and you really hope you can exit it faster, or else you'll pay up so much interest, then it won't work out anymore. Okay. So now let me move on to corporate actions. And before I go into the actions themselves, I want to talk about the process, how it works. First thing happens is there is a board meeting called for a dividend or a rights issue. There's a board meeting that comes up. Then they will get together, they'll discuss, they'll fix something. And then they will say, this is the X date. Now, what happens on the X date is the price adjustment happens for a security and it starts to trade basically after the adjustment. So first I'll take up dividend. Dividend is the most common corporate action. It can either be interim or final dividend. Final dividend happens once a year. As soon as the announcement comes out, you will know how much per share dividend you're going to get. So 100 rupees share, you might get 2 rupees, 1 rupees, I'm going to give you 7 rupees, whatever it is. You will know what the yield is. What happens is this dividend amount on the X date, or actually 3 days after the X date, will actually get credited to your bank account. It will not come to your trading account. And what else happens on the X date is, for example, it's a 2 rupees dividend. The 100 rupees stock on the X date will open at 98 rupees. And that 2 rupees will come to your trading account. So if you're thinking I'll buy security because they're announcing dividend and because of that it will go up, that doesn't happen generally. Okay. Next, let me move on to bonus and stock splits. Now they're actually pretty different in terms of accounting, but what happens to the end user is pretty much the same. It's essentially to having one shirt. They will take it, they will split it into 2. They will give it 2 shirts or 3 shirts, whatever it is. But the amount of cloth remains the same. What do I mean by that? For example, if the ratio is 2 shares for 1 share held, what happens is on the X date, the stock price will open at 50 rupees. So instead of having 1 share of 100 rupees, you will have 2 shares of 50 rupees. This is how the mechanism works. But however, there tends to be some excitement on this. And that's why when the announcement itself is known to the public, the stock sometimes moves up 3-4%, saying hey, it's a good thing, because people generally try to do it because they want to bring down the share price quoted so that more people can trade in more lot. Now let me talk about IPO, FPO, and QIPs and OFS. I know a lot of abbreviations. Basically, these are share offerings. Anyone can subscribe. IPO is for, I mean, everyone knows you apply the first time shares are coming out, you put in money, and if you get lottery, it's almost like a lottery nowadays. You'll get shares, and when it gets listed, you can trade. FPO means it's already listed, and they're offering new shares. QIP is not technically applicable to you; it's only for institutional investors. And OFS is when new shares are not coming to the market; it's existing shareholder who's selling out. Now, to think about any of these share issuances is the people who are already holding, they will hold a lesser percentage of the company. They will own the same shares, but you own lesser percentage of the company. It's called equity dilution. And a company that raises too much capital over time essentially means it's not able to, generate it from its profits. It's not a good sign of that. Next thing I want to speak about its rights. Again, this is pretty similar to new shares issuance. The only thing is it's only open for existing shareholders. So if you're right now holding a security and that company comes out with rights issue, Reliance had come up, Mahindra and Mahindra Financial Services had come up in the history, you are allotted for 100 shares. You have the ability to apply to buy 50 shares. And you can either buy it by paying money, or you can actually sell that right itself to someone else. You're not interested. Regardless what happens on the X date, the price will come down. So if you're thinking it is a zero sum game, you won't really benefit from it every time. Finally, I want to talk about buyback and voluntary delisting. Apple has bought back, I think, some $30 billion in stock over years. So every year they come up. When companies have a lot of money in their books, they'll either give dividend or they will buy back shares. Now, buyback is basically they are buying it from the open market. What happens is the overall shares in the market will go down as the company buys. So they will buy and extinguish those shares. So it normally pushes the stock prices up. And this happens during promoters just buying it up, or even during mergers and acquisitions. It's generally a good sign, but you need to apply in your broker portal saying, hey, buyback is open. I want to tender my shares in the buyback or open offer. So that's why you will have to know that, and you will go to your broker and obviously sell it. Now, voluntary delisting is a buyback for everyone. If it is agreed upon, there are many rules. Everyone will get the same price, and everyone's shares is taken away, and the stock is removed from the market for trading. I'll now move on to taxation. I'll give a small brief on that. Earlier, dividend used to be tax-free. Well, not really tax-free. The company had to pay on it. Now, the dividend is given to users, and the users have to pay dividend tax on it. It will be taxed at your slab rate. So whatever income tax slab you fall into, based on that, you will have to pay tax on it. Let me talk about all the other gains possible. Now, I'll speak about the first one, which is speculative. So what income tax rule says is if you're trading every day, I mean, you're buying and selling in the same day, intraday trading as it is called, it's speculative. And what happens is that is taxed at your slab rate. Now, if you're buying, holding it in delivery, and you sell it before 1 year, it's called short-term capital gains, and it is taxed at 15% of your profits. So 100 rupees you buy, 115 rupees you sell, 15 rupees profit, 15 rupees on that 15% will be, you'll have to pay as tax. If you hold investments for more than 1 year, and this is a rule that not only India, but any other countries across have, is that they want you to not speculate, but to invest in long term. So they will give you tax breaks for long term holding. And that's why it's 10% only, and that too only above 1 lakh. And what does that mean? If you have made 90,000 rupees long-term gains, you will not be charged any rupee for that year, no tax. But however, more than 1 lakh, that extra gain that you make will be charged at 10%. So if you make 1.5 lakh rupees, 50,000, uska 10% is 5,000 rupees is what you have to pay. Now next is F&O, futures and options. Again, it is at tax at slab rate because it's considered as a business income if you're doing it regularly. But it's considered non-speculative for that purposes. Now, let me finally move on to some trading do's and don'ts. I've been trading since 2007. I used to go and instead of going to colleges, I used to go and sit with the broker whole day, and sitting there with people and trading has given me some learnings that I wanted to share with everyone. Of course, you may have a slightly different opinion, but I just wanted to share what I had. On the right side, what you see is called a order book. Now, every security will have it. And at the top, which is actually right now buried under B and S, it shows 1050, which is 1055, which is basically the last traded price. On the middle part, you see something called bid and offer. Now, bid are the guys who are waiting to buy, and you'll see how many shares they are trying to buy and how many orders they have placed. On the right side, you see people who are waiting to sell. Now that's based on, again, the sellers will decide it. As you see, the number of the buyers always goes down. I mean, the bid prices always go down and the offer prices always go up. How a trade happens is when a buyer and seller agrees that this is the price, trade will happen. Until that, it's just an order placed. At the bottom, you have open, high, low, previous close, basically tells you how the stock has moved. And it also tells about lower circuit and upper circuit. So that's about the order book. I always suggest people before they trade to look at the order book, and why I'm just about to tell that. Now, there are two types of orders you can place. It's either a limit order or a market order. Now, in market order, what happens is the trade is immediate. You say, I want to buy 25 shares of Infosys. What happens if you see the offer side, you see that there are 20 shares at 1055.45, another 4 at 75 and 80. So all these 5 shares that are sitting on the right side will get traded and you will get that. So that is called a market order. And what happens in a limit order is you enter a price, it may or may not execute, but once the price comes, only then it will get executed. I've always personally believed that we should place limit orders unless there is an urgency to exit the trade. For entering, I would rather miss an opportunity instead of entering at the wrong price. Depending on spread and volatility, the difference between the prices could be significant. So for example, the stock is going up. It's at 1055. It's going up. By the time you quit buy, enter quantity and give buy, it will get executed 1060 also. And that might be a wrong trade. So you should be really careful about the price that you enter in. Now, if you also see the order book, there is something you can notice. It says that whole numbers tend to have large orders, 1053, 1054, 1055. You see, they tend to have large orders. So what I normally, when I place an order, I give it 5 paisa or 10 paisa above it. So for example, if I want to buy shares at 1053, I'll actually put an order at 1053.05. So what happens is your order will get priority over those guys below. If you had put it in 1053, after those 323 shares are bought, then only your shares will be bought. And this works in reverse way as well, where you will have to put it below the whole number. So that's about orders. Now let me talk about shorting. Normally, normal traders, first you buy and then you sell, right? But you can also do something where you sell first and then buy. What this essentially means is you are expecting the stock price to go down, and then you will buy it at a cheaper price and you will still make the money. When you buy, you can't lose more than what you have invested. For example, you buy 10,000 rupees. Stock goes down to zero, 10,000 rupees loss. That's it. Bad day, bad luck. I'm a bad trader. Let's go home. But however, if you short and the stock starts to go up and you can't exit, loss is unlimited because stock can go to infinity technically. So when you're short, you can start losing things you don't have. So you have to be really careful about it. Now, this will get even more complicated because of circuits. Now, what does a circuit mean? It essentially means the exchange is trying to curb volatility by pricing upper limit and lower limit for a price to trade on. If you see here, it says 943 rupees is lower circuit and upper circuit is 11,500. So that stock will, as soon as it hits the upper circuit, for example, there will only be buyers who are waiting to buy. Sellers would have all disappeared. So, and reverse side on the selling. Now, why shorting can be dangerous, especially in circuit stocks, is something that happened recently with Adani Green Energy. That stock went up 5% each day for 6 days. So anyone who had shorted, for them to even buy back and book that 5% loss, they couldn't. 5 days, 6 days, you couldn't buy a security at all. You couldn't buy back, you couldn't close your position. So you ended up with 30% losses. Plus, brokers will come out and charge you penalties if you can't close the trade, because sell short trade is basically a margin trade. You need to square off by the end of the day, unless you're doing futures, or else you will lose again. You will get lost in penalties. Rome wasn't built in a day, but it can easily be destroyed in one. So be very careful. There is no free lunch. Nothing replaces your own hard analysis. The next thing I want to talk about is actually the biggest surprise movements in stocks happen due to news, results, or announcements. Some pharma company didn't get FDI approval, stock will open down 3%. Then some companies buying out someone else, one will start going. These shareholders will think, hey, we are getting good price, stock will go up. These are, why are you paying so much for that company? This will come down. All these things will happen. And the biggest thing that happens is actually about results. Now, results come out every 3 months, and it's very hard to read results as well. Now, what happens is it's like how you're writing an exam, and your kids are writing an exam, you're looking at their marks card, right? Someone gets 96%, they will still cry because they were expecting 98%. Some people will be happy with 90% because they were expecting 50%. Same thing with results. So just because you think profits have gone up, revenue has gone up, a nice company stock will go up, results they have announced well, it doesn't happen. It depends on what the market is expecting the company to deliver for that quarter. And based on that, the stock may or may not move. The second thing is on news. Now, what happens on announcements and other market data? For example, you will have metal prices. Iron ore prices are going up. All your steel, iron securities, mining securities will start going up. Tata Steel, Jindal Steel, everyone's up. And once China comes in and says, no, we don't want prices to go up, we'll release supply and all, it will come down. Same thing with crude oil. Same thing with US market. There are just so many triggers that comes in. You have RBI meetings that happen every quarter. So for all of these, over time, you need to be reading about these. You need to be following the news. You need to be knowing what's happening for your own company, reading about all your investments to take a better judgment call. Now I want to talk about stop loss, and that's because all these surprise movements can actually, ruin your stock. It is basically an order which is triggered based on a certain price being traded. What does that mean? You bought a stock at 100. You will say, I want to put a stop loss at 95. So what you will say, if the stock goes to 95, sell off my holdings at this price. So what happens if the stock is crashing and you're not able to catch it, if you're not able to see or somewhere else, you can't look at the markets, the stop loss will get triggered and your losses will be minimized. But however, be very careful in using stop losses and even targets for that matter, because a lot of the people believe that it's some random number, 2%, 3%. But as you grow, as your experience grows in the market, it's actually very convoluted. For example, what I do is when stocks are going up and I'm in a profit, I actually sell half whenever I think this is the target. Sell half, 50% down. Next 50%, I actually try to do something called a trailing stop loss. So I start to keep moving above so that even if my stop loss hits, I'll actually sell it for some profit. And sometimes, though you're expecting a stock to go up and the market starts going down and you think it's getting shaky, you just exit it. So you don't need to wait for stop loss to hit. So it's as you grow and mature as an
Shailesh,
investor. Yeah.
we have so many questions coming in. I also want us to, take some of these questions. So
Yeah.
if you can get, if you can do the sixth point, and they really have some amazing questions. I think you have lots to cover there as well.
Yeah,
You can wrap up
definitely,
here.
definitely. Last point is about price and volume action. Again, this actually builds instinct over time. You will actually start seeing charts and price and volume, and you will see maybe I should wait. For example, if a stock goes up 4 days continuously, on the fifth day, it will try to stabilize. You will try to not try to chase. And it will also tell you price trends. For example, one thing that I've always noticed is the last 30 minutes price. If there is a massive movement on one side, the next day, it normally gap opens up around that. Example, yesterday, last 30 minutes, lot of frontline companies went up. HDFC Bank actually traded at 1490 at the last trade, but it's actually closed at 1480 because the closing price of a security is the weighted average of the last 30 days. So be careful about all this. So in that case, if I had a short on HDFC, I would remove it because I know it will probably open up on Monday. So like this, you would actually build instincts over time, and that will help you become a good trader. So I'll stop here. I guess we are having a lot of questions.
Shailesh, thank you so much. That was a really detailed exposition from somebody who is clearly very experienced. So thank you so much for doing that. I think it was really useful. What I would like to do, I hope some of what Shailesh said, became clear to you, that how important it is to do your own research. And that sort of brings me back to the point of you plus AI, which is the theme I sort of started out with. And there have been some questions about InvestorAI and, how do we track stocks, one particular question. So I just wanted to direct everybody's attention to this, and I will show you some of the new things that we have just introduced. So if you're new to InvestorAI and you have not used it, right on your home page, the first thing you see is a video called Getting Started. Please watch that. That will answer 90% of your questions. And then, as you can see, there are lots of new things we've added on the homepage. There is your profile, which tells you your usage statistics. Not going to go into that. Wisdom of crowds, what everybody else is looking at. This is my watch list, the stocks that I'm tracking. And there is various cool things you can explore. And there is a brand new thing that we've added called Configure. And before I come to Configure, I want to draw your attention to the menu button on the top right-hand corner, the 4 squares. If you click on that, go to Preferences, and you will see some new things here, which I will tell you. So you can go to Markets, and in my case, I am tracking US, UK, so I'm going to switch off Europe and I'm going to switch on India. It is very easy to do. That's all it takes. There are a whole bunch of sectors which are activated, and I can add healthcare and so on. As you can see, really easy for all the new people. Please sort of do that. Then I spoke of a new feature called Configure. So if we go on Configure View, we now have 3 sets of views. One is what we call Investor View, which is for the buy and hold and occasional investor. We have a Trader View, which is for a regular trader, and we have the Pro View for an expert trader. What happens is, if you click on Investor, for instance, we click here, your Ideas Corner will change, and you will see only the 3 algos highlighted in red. So let me just confirm that. So it's fine. I come out of it, and let me go to Ideas Corner. Now I only see 3 algos. Okay. Now you can also change this from the home page. So if you go there, because we feel it's so important, so I go back to Pro, and now I will see everything. So I confirm that, and now if I go back to Ideas Corner, you can see I'm seeing all the algos there are. Okay, so this is a convenient feature. A lot of people have said, "Oh, there's so much complicated stuff. It's not InvestorAi, it's not for us." Not true. You can just exclude what you don't have to even see what you don't want to see. Okay. Let me go back to preferences. The other thing I want to show you is active monitoring. People asked us for this, and there was a lot of demand for this. You can set your limits for a loss alert and a profit alert. So what this is telling me that my default alert is 1.5% loss from the price I buy, and a profit alert of 3% from the price that I have bought. And I can say set as default, and now it is set. So now if I come out of it, let's see what happens. Let me exit this. Let me go back to home, and you'll see a monitor button at the top. So my bottom. So now I can monitor any stock I like. So let's take Adani Enterprises, Adani Green Energy. So I take that. So now I can set my own limit this time, or I can just use the default limits. So if I want to set my own limit, it tells me, so I said, no, I want a bigger profit alert here. So I can change it to 4%, and that's done. Now you can take the current price of the stock, or which is 1065.67.55, or if I had bought it earlier, I can just change it. So I can set my own price. So I will just take the current price, and I say monitor now. Okay. So if you want to track a specific security, you can go to active monitoring and do that. And once you go into active monitoring, now it's part of my monitored stocks. So this is Infosys, something I've been tracking for a while. When you go into the active monitoring page, it will show that there's a live insight. So if I click on that, now it will show me the live insight on Infosys. So you can go to a stock from monitoring, or you can go to it from the algo side. And what do I mean by algo side? You can click on Ideas Corner. You can click on Alpha 330. And it will then show you all the live signals. And you can say more at the bottom, and it will show you some more. You can click on any of them, and then it will show you what the company is. And this particular signal came on 21st of May, about 28 days ago. It's made 24%, so really good prediction. Okay, so I'm going to stop here because, as Shruti pointed out, there are lots of questions. But please use the new features. Please use some of the new, and keep the suggestions coming, because that is what drives us to make all the changes and improvements to the app. Okay, so Shruti, let's open up to questions.
Yes. I'm going to start with actually what Sriram just asked us, because he, I think, was looking at your screens, and he said the app version that I have is 2.1.6. Is there a more recent version? I don't see the configure now button, hence asking.
Yeah, Sriram, you will see it. We just released it last night, and Google does it in batches, God knows for what reason. So sometime during today, most probably today, you will see it, and then you just update your app and it'll be there. So I think it's just a few hours away.
Okay, thank you. And Shilpa actually tells us, this is fabulous. I love the configure view, just looking at it. So thank you, Shilpa, for that. Arun wants to know, Akshay, is active monitoring real time?
No, nothing in the app is real time at the moment. Okay, we use end of day prices. We are looking at a possibility of adding either real time or near real time. What do I mean by near real time? 15-minute delay or 20-minute delay. But as of now, no, it is not real time. It's end of day prices.
Okay.
However, you can click on.
Sorry.
However, you can click on the live info button in each insight, and it will open up the Google page, which will actually show you the price, live price of the securities themselves.
Yeah, thank you, Shailesh. I should have pointed that out. But
and you can come back very easily into the app. Even if you step into live info, go into Google, you can come back to our app. It's very seamless. Just adding to that. Rohit says, how can one track performance at a portfolio level?
Rohit, as of now, you can only track at an individual stock level or an ETF level. There is what we are calling internally a portfolio module that we are working on. What that will allow you to do is firstly upload your portfolio either directly or permission us to get it from your broker. Once we have your portfolio in the app, you will be able to run a health check on the portfolio. And we will then tell you all the things that, how does your portfolio rank? How does it compare with other portfolios? How does it do in terms of best in class, in terms of volatility, returns, performance, risk, Sharpe ratio, etc., etc. And we will give you all the diagnosis and all the health check of your portfolio. So this feature is coming. And then finally, we will let you discover for yourself how to improve the portfolio. We never give recommendations. We will never tell you what to do with your portfolio because A, we don't want to give advice. Secondly, we're not authorized to give advice. So we will never do that. But we will make it really easy for you to figure out for yourself as to how to improve your portfolio. So watch this space. It's coming, not very soon in the sense, not in the next couple of weeks, but certainly in the next few months, you will see a portfolio module which will allow you to use AI to monitor and improve your portfolio.
Astitwa, we're going to come to your question, but before that, Shamant has asked us a question, Akshay, a couple of times. So he says that how do we navigate the InvestorAi app? And I know you covered a little bit about it, Akshay, but he also says that he'd like to understand more about how to track a stock, see which stock to buy, what percentage it will go up in the future. So it's really about navigation around the app.
So, Shamant, I can't answer that because it'll take too long. But please, first of all, please watch the demo. It's a demo I've personally recorded on YouTube. It's in the app. So just click on getting started and you will get to see the demo. Secondly, when you want to know how to track stocks, firstly, you can do it through active monitoring, which I just showed you. Secondly, please, there are individual video recordings for every algo that we have. Take the time to watch them. They're not 30 seconds or 1 minute things, but they're slightly longer because it takes time to explain what we are doing. See, what we are doing is very different. We're not showing you what has happened. We are showing you what is likely to happen. So we are a predictive signal app, and you must understand how the signals are presented, what they mean. So please take the time to watch some of the videos that we have in the app. I think they will more than answer your question. If not, write to support@bridgeweek.com. Please join the WhatsApp community. Lots of questions get asked and answered in that forum. So there are many ways to help. We can help you, and we look forward to doing that.
Great. Going to Astitwa's question, because I think what you just said, Akshay, the predictive signals app, it's all, it's connecting into what do we keep in mind before selecting a stock? And Shailesh, this came when around the time you were asking the question. And to add to that, because Deepti's is connected, Deepti says, how do you choose the stock to track based on the universe of stocks that are there in India? So if you could connect how to select.
Simple answer is we don't. The machine does it for us. We have a bunch of algorithms that we have trained over the last 2.5 years, and they have learned in different market conditions. So we are very purist about it. There is no judgment here. We don't do any subjective overrides and so on and so forth. It is always the machine. And either the machine is accurate or it is not. We don't tinker with it. And you will see in every algo, there is a bullseye button at the top banner or top band. If you click on that, you will see the accuracy of the algo, which we report every day. So it is not us who pick the stock, it's the machine. We cover, 4,500 or so stocks globally. We cover 1,500 ETFs globally. And we calculate every signal for every stock every day. So there's a ton of calculation going on behind the scenes. And then only the ones that pass our screening filters get shown to you. So you see the best ideas on this.
Shailesh, one for you. Please explain GTT.
Yeah. Now, any stop loss orders or target orders are applicable for that day. However, some brokers, what they do is they let you keep stop loss or targets till it is executed. Now, what does that mean? This going back to my example, 100 rupees stock, you want to keep a stop loss at 95. If you keep a stop loss today, it will expire today. But if you keep a good till trade, which is basically GTT, until you actually exit that position, that stop loss order will continue, or the target order also. You can say 110. So the day it reaches 110, it will sell, and it will basically close the transaction. So this is, some new brokers are offering it, not everyone has it, but yeah, it basically allows you to walk away, step away from the market a little bit so that the trade is covered, either stop loss or target.
Okay, I'm just going to take one more, Akshay, but we are running a YouTube live at the moment, and we've got a question on YouTube, which I'm just going to take on the live. So Dheeraj Gupta asks, Sir, integration with Upstocks and all Indian stocks, why can't it be there on the app?
It is there in the app. Let me just reshare my screen. I want to show it to you because it's quite important. If you go to any Indian stock, okay, you will, at the bottom of the screen, any insight, at the bottom of the screen, you will see a shopping cart. And that is basically the trade button. Let me get in to show it to you. So let me just get into Infosys, which I was tracking earlier. Now you can see the shopping cart at the bottom. So I'm tracking Infosys. This is active monitoring screen. If I click on the shopping cart, you will see me connecting to a gateway that will then take me to 10, 11 brokers that we are connected with. So these are the 915 Paisa, Angel Broking, Axis, HDFC, IFL, Motilal Oswal, Trustline, Upstocks, Zerodha, and Edelweiss and Alice Blue. So these are the brokers we're connected with. If you have an account there, and then you can open an account now. So you can just say sign up, and then it will let you open an account immediately with either Zerodha, 5 Paisa, or Angel Broking. So this is all integrated with the app. It's there for you to use, and I hope you'll have fun doing it.
Great. Akshay, we had a question on chat at that time around, so how are we priced and how can they access that? So I'm going straight to that.
We are priced very well for cost of a Swiggy order.
Akshay loves saying that, which is true. So let me show you the Swiggy order one, and then actually show you where the big discounts come in and when, where it's really worth it for all of you. So we have a monthly, quarterly, annual plan, Domestic Pro, which is nothing but our India plan. You get India plus all our algos, all that amazing stuff you saw. We show you on the app, and we have a lot of our subscribers here today, who've been asking us questions as well. They're all on these plans, and I'm sure can vouch for what we do. Global Pro is where we cover more than 20 countries across the world. Today, US, UK, Europe, lots of APAC is all getting very popular, and you can actually invest from India, and we are able to show you, stocks, signals, let me say, signals that you can actually look at to invest. Again, 15% discount on the quarterly plan and annual plan, only for people who have attended our webinar. So how you can access this is download our app. If you're already a registered user, you already have our app, you can just go into subscribe, use this code WBNR17, and you get your discount. We also have a 2-week free trial for a lot of you who are new, who just came in. Again, something we just started. I hope you enjoy the trial. We know you will want this post the 2-week trial. You can also come into our website and use this code. The website is www.investorai.co.uk, and you could just use this code and start your plan, and then we'll anyway track you straight to the discount as well. So we hope to see a lot of you, and thank you so much for these questions, and catch us on YouTube, catch us on all our social channels, and please rate our webinar. It's up on the screen today. Shailesh, thank you so much. Lots of messages where they absolutely loved the session. So thank you so much, and hope to see all of you next week, same time, place. Stay safe.
Thank you so much. Bye.
Bye. Thank you.